Today, I want to share with you a special topic that not only applies to life, but also holds profound value in the field of financial trading. Stop caring about things that don't matter. This is a philosophy I have distilled from ancient wisdom combined with practical lessons in the trading market. In the journey of a trader, emotional stability and the ability to focus on oneself are two key factors that determine success. I once read a book a long time ago, but what it taught has stayed with me ever since. The book discussed how people face judgments, criticisms, and expectations from the outside world. Interestingly, this philosophy applies perfectly to trading. When entering the market, many traders are easily swayed by chatter, hot news, or trading signals from those around them. However, this excessive focus on external factors often causes them to lose their ability to analyze independently and trust their plans. In financial trading, the most important thing is to control your inner self. The market is highly volatile, like a massive storm that can sweep away everything. Traders who are obsessed with others' praise or temporary losses will quickly exhaust themselves and lose direction. I believe that to succeed, every trader needs to learn how to maintain a calm mindset amidst the storms, focusing on their personal trading plans instead of following trends or others' expectations. Ancient wisdom once said, "A calm mind sees the water clearly, and tranquility enables long journeys." This thinking is even more valuable in trading. A person who can stay calm amid volatility can make wise decisions and maintain trading discipline. Reality has shown that the best traders are not those who make the most money in a single trade, but those who can control their emotions, endure short-term losses, and aim for long-term goals. My personal view on this matter is that success in trading is more of an internal battle than a fight with the market. Do not try to prove yourself right to others, and do not get caught up in the glamour of traders who achieve big wins in the short term. Instead, focus on building independent thinking, patiently waiting for opportunities, and, most importantly, learning to accept failure. For me, learning to stop caring does not mean being apathetic or indifferent. It means knowing what deserves attention and letting go of distractions that veer you away from your goals. The journey to becoming a successful trader is not easy, but it is a worthwhile journey. If you can learn to control yourself, stop being affected by negative influences, and focus on improving every day, this is not just a lesson in trading, but also a lesson in life itself. 1. Focus on inner strength, not external noise. Perhaps you've often felt confused amidst a flood of opinions, analysis, and advice from all directions. One person says, "This pair is definitely going to rise," while another insists, "No, sell it now." It's hard not to feel swayed, but you know what? A trader's success doesn't lie in following others' opinions, but in understanding one's strategy. This is the time to focus on your inner strength instead of getting caught up in external distractions. When you step into the market, try to see it as a vast ocean. Each powerful wave is a price fluctuation. The whistling winds are the endless chatter from experts, and the flashes of lightning are the fleeting, enticing signals. If you only keep looking outside, you'll easily feel overwhelmed, disoriented, and lost. But if you turn inward and hold on to your inner compass, you'll realize that the storm outside can't truly control you. Your compass is your trading strategy. It's something you build yourself, test and learn from through both success and failure. This means that instead of asking what others think, you should ask yourself, what is my plan? Why am I doing this? Only when you understand your strategy can you stand firm against any waves the market throws at you. Remember, the market doesn't care about your feelings or thoughts, but you have complete control over how you react to the market. Many believe that to become a great trader, you need as much information as possible. That's true, but not entirely. What you truly need is the ability to filter information, to discern what is important and what isn't. If you let every piece of advice or minor market movement affect you, you'll always feel insecure and distracted. But if you place your trust in the strategy you carefully developed, you'll find yourself calmer, more decisive, and more effective in your trades. A great trader is not someone who knows everything, but someone who knows what they are doing. Ask yourself, do you feel comfortable standing apart from the crowd? Do you dare to go against the trend if your data suggests it's the right move? If your answer is yes, then you are already very close to success. Finally, and most importantly, never let the market or others control your emotions. You can't change whether prices go up or down, and you can't silence those who always act as if they know everything, but you can choose how to react to all of it. Focus on yourself, stay clear-headed, and don't let anyone out there shake your resolve. The market is a long-term battle, and only those who hold steadfast belief in themselves can reach the end of the journey. So, starting today, practice focusing on your inner strength and eliminate external distractions. Just like a boat on the sea, when your heart is steady, every storm becomes a challenge, not an obstacle. 2. Control your emotions to maintain calmness in wins and losses. Being a trader is like embarking on an adventure full of challenges and surprises. At times, you stand on the peak, watching your profits multiply by the minute, feeling boundless joy. But there are also times when you are swept into a vortex of losses, watching your account dwindle helplessly. The market is ever-changing, and so are your emotions. But here lies an important lesson. Controlling your emotions to maintain calmness is the key to going further on this journey. When you win, excitement often clouds your judgment. Many traders, after a few big wins, fall into the trap of overconfidence. They think they have mastered the market, believing just place a trade and it's a win. But this overconfidence often leads to poor decisions. You might increase your trade size hastily, enter trades without a clear plan, or even bet everything on a single trade. The market, with its inherent harshness, will not forgive such mistakes. So even when you're riding high, always remind yourself, this is just a part of the journey, not the destination. On the other hand, when you experience losses, feelings of disappointment and self-blame often take over. You might think the market is against you, or that every decision you make is wrong. But this is not the reality. The market never targets individuals, it simply operates as it does, and your job is to adjust yourself to adapt. A calm trader is not someone who doesn't feel failure, but someone who knows how to accept it, learn from it, and keep moving forward. As the saying goes, losses are just tuition fees to learn how to become a better trader. Did you know that emotions are a double-edged sword in trading? When you let your emotions take control, whether it's the thrill of a win or the despair of a loss, you easily lose your clarity. And when you lose clarity, you start making mistakes, entering trades without a plan, failing to set stop losses, or trying to get back at the market. These actions not only cost you money, but also your confidence. So how do you stay calm? The secret lies in separating your emotions from your trading decisions. Always remember that each trade is just a small piece of the larger picture of your trading career. Winning or losing a single trade does not define you as a good or bad trader. What truly matters is whether you followed your plan, maintained discipline, and learned something from the outcome. Develop the habit of taking deep breaths and spending a few minutes reflecting before making decisions. If you've just had a big win, pause, review your plan, and ask yourself, was this victory due to my adherence to strategy, or was it just luck? If you've just had a loss, ask, what did I do wrong? Was it a change in the market, or did I fail to follow my plan? By asking these questions, you'll gradually build the ability to control your emotions and make more rational decisions. Equally important, learn to rest. When emotions become overwhelming, the best thing you can do is step away from the screen, go outside for fresh air, or even take a few days off from trading. The market will always be there, but your mental and emotional health needs care. A trader with a healthy mind will always have an advantage in the long run. Remember that trading is not an emotional game, but a journey of self-discipline. Every win is a lesson in patience and discipline, and every loss is an opportunity to improve. When you learn to control your emotions and remain calm whether you win or lose, you'll not only become a better trader, but also a better version of yourself. And that, I believe, is the ultimate goal we all strive for. 3. Distinguishing between what matters and what doesn't. The financial market is like a dense jungle where every tree and every bush sends out its own signal. Without the ability to distinguish, you can easily lose your way and your sense of direction. Every day, you will encounter countless hot news items, analyses, predictions, and hundreds of trading signals from various sources. Sometimes, all these things can overwhelm you, leading to hasty and thoughtless actions. But you know what? A great trader is not someone who chases every signal, but someone who knows how to focus on what truly matters and ignore the rest. You have to accept that not everything is worth your attention. An economic report, a price chart that has just spiked, or even a comment from a famous expert might just be temporary noise. Ask yourself, does this information affect my long-term strategy? Is it truly important? If the answer is no, it's best to let it go and stick to your plan. This is not just a skill, but a mindset that needs to be cultivated to survive in the harsh market environment. Let's take a simple example. You are trading based on a long-term trend strategy, focusing on larger time frames like weekly or monthly charts. Suddenly, unexpected news breaks. The stock market plunged during the morning session. If you react immediately by selling off or changing your strategy just because of short-term news, you might lose out on bigger opportunities ahead. What you need to do is stick to your plan and remind yourself that minor fluctuations don't change the bigger picture you are pursuing. This is precisely why distinguishing between what's important and what's not is so crucial. If you spend too much time and energy tracking every small movement, you won't have the strength left to focus on larger goals. Remember, the market is always noisy, and most of it is just meaningless chatter. It's like driving on a long road. The honking from the sidelines isn't worth turning your head for. The important thing is to keep your eyes on the road ahead. One essential skill every trader must develop is the ability to filter information. Not all news needs to be read, and not every signal needs to be analyzed. You need to focus on the indicators that truly impact your strategy. For example, if you trade based on macroeconomic factors, Pay attention to data like interest rates, inflation, or unemployment figures. Don't let yourself be distracted by minor news like a CEO's offhand comment or a short-term event that doesn't significantly affect the market. Additionally, question everything you read or hear. The market isn't always right, and experts don't always offer reliable advice. Before acting, ask yourself, is this really important to my trade? Does it align with my long-term goals? These questions will help you filter information effectively and avoid being swept into hasty decisions. Finally, remember that trading is a long journey. The small steps you take today may not decide everything, but they must always move in the right direction. Whenever you feel overwhelmed by the barrage of information around you, pause and take a deep breath. Remind yourself that you don't need to know everything, nor do you need to act on every signal. What's important is to stay focused on your plan, disregard what's unnecessary, and keep your mind fixed on your bigger goals. It is this calmness and ability to distinguish between what matters and what doesn't that will help you stand firm in the challenging journey of trading. Let the market do what it does and focus on doing your job well. Stay calm, clear-headed, and consistent with the strategy you've laid out. That is the true path to achieving success. 4. Building independent thinking and consistency. Stepping into the world of financial trading, you'll quickly realize that the market isn't always logical and people always have opinions. Everyone has their own theory to explain every movement, but if you only follow what others say, you'll never find your own path. This is when you need to build independent thinking and consistency. Two qualities that not only help you survive, but also succeed in this challenging environment. Imagine the market as a bustling marketplace where everyone is constantly chattering and making predictions. This currency pair is about to skyrocket. Buy now or sell everything. The market is about to crash. These remarks are like vendors shouting everywhere, easily pulling you in if you lack independent thinking. But if you take a moment, take a deep breath and ask yourself, is this really true? Does it align with my plan? You'll realize that not all words are worth trusting. Independent thinking doesn't mean opposing everyone or dismissing all opinions around you. It means knowing how to filter information and make decisions based on your own analysis, not emotions or influence from the crowd. Remember, the crowd in the market often acts on emotions, and emotions are the number one enemy of traders. If you follow them, you'll not only lose your direction, but also your ability to control your own plan. Building independent thinking requires time for learning and practice. Ask yourself, what is my trading strategy? How well do I understand it? Do I believe in it? If you don't believe in your plan, you'll easily give up when facing losses or change your strategy just because of someone else's comment. But if you truly understand and trust what you're doing, you'll consistently stick to it, no matter how the market fluctuates. Consistency doesn't mean rigidity or stubbornness. It means knowing what is right and sticking to it, while also being willing to adjust if your plan needs changes. Remember, your plan is not an unchanging truth. It can be improved and refined over time. What's important is that you remain in control of it, not letting external factors influence it. One of the best ways to build independent thinking is to practice asking questions. When you read an analysis or hear a comment, don't believe it immediately. Ask yourself, does this information align with the data I have? Does it conflict with my strategy? What's the motive of the person giving this opinion? These questions will help you view things objectively and make more informed decisions. Additionally, learn to accept that you can't please everyone. You may face criticism for deciding to go against the trend or be mocked for refusing to jump into a sure win opportunity. But remember, trading is your job, not theirs. Don't let others' judgments affect your plans and goals. Independent thinking and consistency aren't things you acquire overnight. They require time, practice, and challenges. Every time you resist following the crowd, every time you confidently follow your plan despite someone saying otherwise, you're building a solid foundation for these qualities. And trust me, when you achieve independent thinking and consistency, not only the market but also your life will transform. A successful trader isn't the one who knows the most, but the one who knows what they're doing and persistently executes it. So, starting today, begin your journey of building independent thinking. Learn to trust yourself. Trust what you've researched and analyzed. Don't let the crowd control you. Instead, let yourself control your journey. Only then will you truly take charge of your destiny in this ever-changing trading world. 5. Cultivating patience and risk acceptance. Financial trading is not a short sprint, but a long journey full of challenges and surprises. Along the way, you will inevitably face failures and criticisms. But how you handle them will determine how far you can go. Patience and the ability to accept risk are not only important skills, but also essential qualities to become a successful trader. Imagine you are a fisherman. You cannot expect your net to be full every time you cast it. Some days you sit on the boat for hours and catch nothing. But do you give up? No, because you know that the important thing is not the empty nets, but patiently waiting for the right moment when the fish come. Trading is the same. You won't always have the perfect opportunity to enter a trade, and not every trade will bring profit. But if you patiently wait for good opportunities, you'll find that big wins can easily make up for small losses. Patience doesn't mean sitting idly and waiting aimlessly. It means knowing what you are waiting for and why. A patient trader is someone with a clear plan who understands that not every moment is suitable for trading. They know that real opportunities only arise when the market meets the criteria of their strategy. If you enter a trade out of impatience or fear of missing out, you will not only lose money, but also lose confidence in yourself. But if you learn how to wait, you'll feel more secure, because every decision is based on thorough preparation. Along with patience, the ability to accept risk is also a necessary skill. The financial market never guarantees anything. There will be days when everything goes perfectly. But there will also be days when you face consecutive losses. If you let those losses affect your mindset, you may fall into a state of panic and make poor decisions. But if you understand that risk is an inevitable part of trading, you'll learn how to face it calmly. Risk acceptance doesn't mean reckless gambling. It means knowing in advance what you can lose and being mentally prepared to deal with it. For example, if you've set a stop loss before entering a trade, then when the trade doesn't go your way, you won't feel too surprised or disappointed. You know that cutting losses is part of the plan and a way to preserve capital for better opportunities in the future. Remember, failure is not something to fear. What's truly scary is failing to learn from it. A losing trade doesn't mean you were entirely wrong. It simply means the market didn't follow your prediction at that moment. The important thing is whether, after each loss, you take the time to reflect, understand why you lost, and improve your strategy. If you can draw lessons from your failures, then every losing trade becomes a step forward, not a setback. Learn how to maintain composure, even in the face of criticism. You may encounter people who doubt your abilities or make comments that undermine your confidence. But remember, you don't need to prove anything to anyone but yourself. Instead of letting those words sway you, focus on your goals and persist on the path you've chosen. Patience and risk acceptance not only help you survive in the market, but also help you grow in mindset and emotion. Every trade is not just an opportunity to make money, but also a lesson to build your character and skills. So, learn to wait for good opportunities, accept that failure is part of the journey, and always believe that each small step brings you closer to success. The market will always be volatile, but a steady mindset will help you overcome all challenges and stand strong on your path.